Okay, well, welcome, folks. It's the 19th of October. Joe with you here, getting into the midpoint of what's supposed to be seasonally slow. Now, folks, this is the 35th anniversary of 1987's Black Monday. Yeah, I read articles that pop up. Doesn't mean a hill of beans to me, but what it did remind me of is this is an options expiration date or cycle. So remember the 21st here is regular expiration for your October options, and we're getting closer to the end of the month, and we are in the midst of earnings season. So, regardless of the 35th anniversary of the crash, we are in some pretty fun situations when it comes to earnings and options expiration. I've got my 2 cents on the markets, and please start typing in some trades if you guys want to look at them, because I'd like to share, and we can take responsibility for everything and continue to do this class. All right, you get the drill. So, let's just get to the basics here. The CPI comes in much hotter than expected. It was on Thursday. We talked about it on last week's Wednesday class. Hey, this thing could gap up and fall apart. It could gap down and come back. It seemed to do the latter. Gap down and came running right back. This could be a flush out, meaning that everybody that wanted to sell did so immediately. And what's left, if you don't sell, prices will tick up and move higher. Now, the volume was pretty high, so there was a lot of transactions going on, and obviously the majority of them were to the downside and then rallying back up. It put us in a pretty interesting area. We'll talk about that here in a minute, but we are bearish and pessimistic in the sentiment. But the markets bounce after the gap lower. This is very common when it comes to gap up, trade down, gap down, trade up. It's a revision, and it could be caused by a few different things. Based on Sunday's Trading Room, talking with Darren and Rob, Darren believes that it was just simply what I said a second ago is short cover rally. Just people getting out of their positions. Everyone that sold, or everybody that wanted to take profits in their shorts did, which means you had to purchase. The reason being is because he didn't see too much action in the VIX, and I tend to agree with that. We're still in a bearish trend. We are still in what is now a bear rally. It's just super, super choppy with some gapping. And moving back and forth. Rob and I were on the phone last night, or I should say after the market. We just kind of giggled because we were taking a look at the weekly chart on this, and nobody really would have survived unless they were position size for max loss and max gain, or I should say max loss, and just allowing this to kind of play itself out. But if you were trying to catch a bottom or a top, it's just been a pretty tumultuous few days. So it's slowing in housing, consumers still active. So I'm seeing good, I'm seeing bad. We'll get to some numbers. There's not a lot this week, so we're going to be leaning a lot more on earnings. That's kind of where I want to go with today's class. However, there are a lot of trades out there, and we've got a few that, once again, we carried forward. There's coin again in the neutral side, and that bad boy has been nothing but perfect. From last week, we had Ring and HRB and TT. All of those looked really nice. I did like AMC with continuation of the downside, App, Newmont, Home Depot. And what's really interesting, I'm seeing this gap in the markets to the upside, or this feeling of not a gap, but I'm sorry, the move off of that bottom and retracing up to resistance levels. But I am seeing some really good bearish opportunities in some of these bearish stocks that have continued. In fact, thank you, James. James has got a trade for us to look at on Newmont, and I don't know if it was one of my choices. I don't think I have it up here, so this is going to work out great. So let's get into them. LNG, what I liked about it, if you can see this, and I'm going to get ahead and have fun with my pen today. Today's going to be a fun pen day. Let's do red so we can pay attention to it, right? What I liked about it is here is today, and here was previous Wednesday. So we saw this as kind of a little bit of a gap down, consolidating on its 20-day moving average to move higher, and it sure did, but guess what? It kind of reset itself. Now, if you got into this position last Wednesday, you're still fine. In fact, you're right back to where you started, maybe a little bit of time decay. So if you have that vertical spread that expires in the next few days, you're sitting pretty. Or if you got a diagonal spread and you sold that 175 or 180 and it expires in the next 2 days, 3 days, or 2.5 days, you're doing great as well. I still like it here as yet another entry point. I'm going to have to move to, maybe I'll do a different color. But I like it here. I like it pushing above the 172.5 mark, or even retesting that 175 and moving higher. It's energy. We did see some builds and inventories with gas and energy, but we're also expecting lower demand when it comes to that. So it's kind of playing its own game, and we are seeing some pretty consistent strength in some of these energies, in the energy sector, in some of these energy stocks. So I do like that. Let's move to Schlumberger. Real quick, I didn't check the earnings, but I do believe that these are coming up. I think Schlumberger's earnings are pretty soon, the next day or so. Somebody check that if you'd like. But I like the breakout today above that 44 mark. It's a very aggressive looking ascending triangle pattern here. Yeah, I'm going to go ahead and switch to, you know what? I haven't done blue. Let's do blue. Yes, I'm having fun with my pen today. All right, folks, what I liked was this break above the 44, but a pretty cool ascending triangle pattern from its previous breakout of 40. So I like how this kind of came up, staged, and it looks like it's going again. Now we do have a target back here, don't we? About just shy of that 50 mark. So this could, it could eventually get there. It could move a little sideways. Maybe it runs, if you want to take your measurement here, that's at 2 to 44, 44 to 46. Play with something back in there, however you guys want to target. Remember, targeting is a little bit more of a art form than it is technical. But I do like it. It feels like it's surging right now. You might feel like you're chasing it, but you wouldn't be if you were to put a vertical on this or diagonalize it, maybe around the 46, 48 level. So I like it. Once again, energy, oil, gas. But triple check those earnings. I'm not sure if this is because of its earnings or it's right up against it. Thank you, John. They're the 21st, so they have earnings on Friday. Okay, so maybe we'll see where this goes over the next couple of days. You could play an earnings announcement on it. Thanks, John. All right, CVX. This is another one. I glanced at a few of these, and I thought some of these earnings were like the 1st of November, 2nd of November. So you got about a week or so. But this is absolutely confirming today. Nice breakout. Let's draw my lines here. Really cool ascending triangle pattern in the short term. Looking at the 200-day moving average, you could get maybe this little bit of a slope here. So it's still kind of on its way to pinching at a ascending triangle, so it's got some more distance, but it does have a nice surge going on today. It does have a clear target up here at 180 if you wanted to go longer term on it. But I liked it as well. Now it's kind of difficult, folks, because we do have everything in energy. Did you guys notice that? I pulled up 3 trades, and they're all in energy. They're all do with gas. It's kind of where you find it. These are the ones that are holding in. These are the ones that are bouncing. The bounce in the overall markets, like I said earlier, created, a little bit of a hiccup here and there in some of the bearish charts, but some of these other ones, let's get to the bears here after coin, are not doing well. This is still a very pessimistic, bearish market. We are in a bear rally. I can't say that enough. Even though it feels like, hey, that could have been the capitulation, the gap down. It's not. We didn't really see much on that VIX. Okay, here's coin. Guess what? Still moving sideways. This thing is just been cool. 80, 60. Still playing that game. Retested it a couple of weeks ago, and we talked about that. Hey, we could be in the lower end. Retested the upper part there a few weeks before that, early September. Bollinger Band, guys, these things have got to be pinching pretty tight here. But good range, still looks good. You got 3 days left for you guys that did this in October's expiration last week or the week before. Boy, I mean, this thing has just been money, and I still like it. I do. I like it moving forward. I don't know if you guys have been following the cryptos. They're not participating in a lot of this rally. They did come off a little bit, but today, well, they were struggling. I'm not sure where they're at now, but the markets are bouncing. Cryptos kind of aren't. So we'll see if that just keeps this moving sideways. So moving on to the bears. Excuse me, folks. Let's talk about the ones from last week. This is Ring. I love it. It was a good breakdown. We talked about, hey, maybe this thing can base at the 35 or even bleed lower. And for the diagonal spread, the credit spread, it's just stayed below this 34. Let's count back here. That's Wednesday. Tuesday, Monday, Friday, Thursday, Wednesday. So this is last Wednesday. So it did definitely stay sideways, slightly lower. So if you diagonalize this credit spread, vertical spread to the downside, you still have a couple of days if you did October's expiration for this to roll over. I still like it here as well for anybody who wants to get into this as a newer position. Been weak, staying weak. I don't see it doing much but being weak moving forward either. All right, so let's move to HRB. And this was at first, I thought it was kind of a counter trend, but I did like the crossover. We were setting lower highs here, and we talked about it, I believe. So I count back 3. That's 1, 2, 3, right about here. So maybe a basing area, see if we could base and roll over at 38. And what it do? It gave us a really pretty bear rally. Look at the doji yesterday. Let me get rid of my pins so you could see that doji'd right on the descending 20-day moving average. Confirmation today to the downside. Clear target here at 38 if you guys want to play this. Now, I believe H&R Block is the 1st or the 2nd of November. It's earnings. You guys can always just triple check that. If you are a little bit worried about it not revisiting the 38 and it could hang itself back up at this basing point here at 40, you could still play this sideways to down with a credit spread. But if you want to carry it into its earnings, might want to just flip the coin to the bear side and target somewhere around that 38. So a couple good things we could do on HRB. I like that. And then the last one I have for our example was Home Depot. Corey made mention of this yesterday, and I did like it. I like everything kind of where it's at. The consumer cyclical, which happens to be one of the weakest sectors. I know they're all bouncing, but it's in the weaker sector. It has to do with home improvement. The demand for housing is starting to slow. This usually follows suit. So there's my philosophy behind it. Now let's take a look at it technically. Descending here. Looks like we had a support level there. This is a little bit of a hiccup here, but if it could break this level, I think we easily revisit the 270 or even further to the downside. But I like the pattern today. Gap up yesterday, or the pattern recently. Gapped up yesterday, gap down, confirming below that 280 mark at 278. So it's a big mover. It's volatile. You could take a big bite out of this, play a 280, 270 vertical spread, maybe go into November. I don't know its earnings, though. I'll check to see where its earnings are, but pretty cool trade. All right, guys, that's about all I got for those. We do have huge lists, so make sure we revisit them as often as you want. Let's get into the market analysis. And what's interesting about the behavior of the 3 indices, I didn't really pay attention. I focused so much on the SPY, but they are singing 3 different songs, and the Qs look horrible. But the diamonds look pretty strong. And then the SPY is in the middle. So 3 bears, right? Too hot, too cold, and just right. All right. So anyways, so far, Monday, Tuesday, and Wednesday, everybody's bounced. The Qs had a huge bounce, almost 4% so far, and the Russell's at 3.03. Oil and gold, not so much. Oil, I believe, is dropping because of the build in inventories and the expectations of lower demand, and so it's kind of dropped. Gold, on the other hand, sliding a little bit lower. With inflation, it's funny because the strength is in the dollar, not so much the precious metals. I thought that was pretty interesting. So that's why it was easy for me to say that sentiment was bearish and that pessimism is definitely out there. It's because we're kind of seeing it and how these things are working. But diamonds, SPY, Qs enjoying a real nice bounce over the last 3 days since that hiccup or that gap down in retracement on Thursday. So let's get into the chart. Here's the SPY, and it is giving me an absolute bear rally. It's slightly lower, and I would be completely fine if this came all the way back up to the 380 mark. I'm fine with that. You guys understand that that is a gap retracement, but is still a lower pivot low. So we are still in bear town. We really are. I don't know how else to say it. If you want to go a little bit steeper, you could draw here. We're well inside of that. Now, the day's not over, the week's not over, and we could revisit this 380. We also could stay where we're at and start to come back down to the 360 mark, which gives us a little bit more reason to be bearish. And we have seen the volume starting to drop a little bit lower. Now, today's not finished, so if it finishes somewhere on that line that I drew or the descending, since that announcement, with this move higher, we have decreasing volume. Take a look at this move, right? Increasing volume on the sell, decrease on the bear rally, and then it should increase. It didn't here because we're waiting for that event. Here's another example. Increasing, right? Decreasing. That's why I'm thinking that these rallies, they kind of run out. Usually we would see the inverse of that if this was a bull market. All right, well, there is my argument to be made. Now let's take a look at the diamonds. This looks different. This chart looks just different. And what's so different about it? Well, we're already above that resistance area. I'd call it maybe about the 302.5 mark, or the 300, right? This was the 300 area that we kind of grouped together when it came to June's lows. This isn't a lower bottom, is it? But an equal bottom where the SPY was lower. And as you can see, it is above that 300 mark, retracing back up to, well, we're going back into May. Is that right? May's pivot point back here. Had another one early September. So that 200-day moving average is now the resistance, or excuse me, the 50-day moving average is now the resistance area, the 310 mark on the diamonds. Why is that? Well, energy's in here, industrials, basic materials, things of that nature. So this does seem a lot stronger than the SPY. Now the Qs definitely feel the weakest. It's within its trend, or I should say its downtrend. It's a perfect move. I don't even have to draw it. It's funny, I'm using the same color, but that 20-day moving average is right there. It's got this perfect decrease, definitely a lower pivot from the previous pivot, definitely broke July, and now is threatening to be below it. It's a green candlestick today, but it's threatening to stay below it. Now this, I would still be comfortable with this at the 280 mark. It'd be a healthy bear rally, but if it was to roll over here, it's just continued weakness and more selling. So I'm not seeing anything different in any of the sectors or markets, regardless, or with the movement we saw on Thursday. Now that's kind of what you look for. Capitulation, that could be a candle, this bullish engulfing candle that did not confirm. It did not confirm the next day. It was just kind of a wish-wash, right? Big bull candle, the first one I drew, with a red candle. Now, not to get too nerdy, but this is also referred to as a dark cloud cover when you have a gap above, and then it comes down and finishes at least halfway of the previous day or more. It's dark cloud cover. Also a reversal signal to the downside. So we're getting contradicting moves, contradicting signals, which is why I have to agree with what Darren said on Sunday. This is not capitulation. It looked like it, but we didn't get the initial sell-off. The spike wasn't high enough, and we got that retracement on Thursday. So nothing changed. Nothing changed for me. I didn't see what was super weak is now strong. I didn't see a massive purchase off the bottom. A lot of my bearish trades still look really good. So I got to treat this as a bear rally. Let's get into the economic news. Not a whole lot to talk about when it comes to this, but I did see a small uptick in the production index. So I said, whoa, okay, well, that's kind of inflationary. However, I kind of forgot about this number yesterday, the Empire State Manufacturing Index that shows massive contraction. They're kind of one washes the hand of the other. It's no big deal. So I'm not going to get too big into that. Home Builders Index, you could see here, definitely a drop. That's to be expected. That's actually good bad news, right? Bad news is actually good news. So we'll see where we go for the rest of the week. Housing starts, building permits. This one, a little bit of an uptick when it comes to permits, but the housing starts is starting to slow down. Also showing a little bit of contraction, which is good when it comes to nipping the bud on inflation. The biggest problems that we have is a consumer that hasn't stopped consuming and prices that are not coming down. So until those two start to really mellow out, I don't think we're going to get the slowdown that the Fed's looking for. There's my opinion. We have the jobless claims. Expectations are for another little bit of an uptick. Continuing claims, we'll see where that goes. Existing home sales, I imagine that's going to go lower. Leading economic indicators will be an interesting one. We'll see if that can stay in line or slightly lower to be good. But not a lot to go on. I truly think we're going to be living the earnings life, if you will, for the next couple of weeks, which is good. I'm very interested to see on what we do as investors or what traders are looking for. If there's going to be bottom fishing or a reason just to dump. Okay, let's get the poll. We've been pretty pessimistic for a while. -2, -3, -1 in the week. I think each week I've been at least -1, and it's kind of hard to switch gears when you have the markets that we've had over the last little bit and the behavior even after that bounce. It's just looking like a bear rally. Okay, let me finish this up, or I should say share the poll with you here. I'm going to go ahead and close it and share. There it is. 90% of the class, -1, 10% -2, 60% 0. So we are definitely sitting at that -1 to flat area for the rest of this week. And I am probably a little bit more pessimistic than you guys. Now, it was kind of interesting to switch that above 20 AMA, but it does not change my overall outlook. This is still a bear rally. I don't think we make it through this week without rolling back over. We might. Hey, I could see we gap down, we got a green candle, maybe we close strong, maybe we close back up to where we closed yesterday, right? It should be a strong day. And then maybe we go sideways for the next 2 days, or we get some news like Netflix came out and they beat some numbers, got a little bit of an uptick in subscribers. However, we'll see if that can continue into next quarter or kind of their talk, or more importantly, I should say, we want to see what investors do with this over the next few days. We'll see if they sell into it like, hey, here now's my chance to get out of Netflix with a profit. Or do these traders believe that we can just absorb whatever bearishness is going to come and I'm going to stick with Netflix through the thick and thin? That's really where I'm going to go with this, because today's and yesterday's candles aren't doing much for us. But we're above the 20-day moving average on the SPY at least. I'm still -2. I still think it's a bear rally. All right, let's get into the sectors. And then we'll go through a couple of trades that you guys are looking at. So the sector analysis, it's pretty obvious that we are up. Everything's up. Financials leading the way. We did have a slew of bank numbers, and a lot of them didn't do very well. There was good and bad with both. But overall, it seems to be the larger bounce out of this bounce. Man, I'm not sure if this is just an oversold breath before financials get smashed, or if this is indeed a little bit of a stabilization off of the bottom. But consumer cyclical also having a bounce, but not as strong as the others. We'll take a look at the charts here. So on the financial side, oh, sorry guys, I should have kind of misprinted there, but we'll talk about it. The XLF, here it is. It is lower now. It's at that resistance area. It popped its head up, which is why I think it showed a little bit more strength. So we are actually above, we'll call it 32, and almost touched that 200-day moving average today. A little bit more weak. We'll see if it's going to kind of stay in this area or if we're going to roll over and revisit that 31. It just depends on where these markets take it. It probably looked really good yesterday during the day as it was mostly approaching the 200-day moving average. But it's still in a bearish trend, a bearish area. I'm trying to spin it bullish, but I just can't. Let's go to the next chart. Let me make a comment here, folks. Sorry about that. This is supposed to be financials, not consumer defensive. But let's get to the consumer cyclical, because this is definitely showing a little bit more signs of weakness. This almost feels like the NASDAQ, doesn't it? So didn't quite get up to these levels here. I guess we could bring it across the 60. It's come back down much further away from its 200-day moving average than the financials was. In fact, it's just barely above its 20, which I had to give it a green score, right, when it came to my top-down approach. But it's a very weak green score, and this is still looking like a bear rally to me on the consumer discretionary side. We'll see. This should be the sector that gets hurt once the consumer tightens. Maybe we'll get a lot less purchasing on Amazon Day, right? Or Black Friday, or for Christmas shopping, things of that nature. If the consumer indeed turns the volume down, it's going to be the discretionary to get hurt first. All right, so We're back to the bearish resistance levels. Plain and simple. This is a bear rally, and it was a big one on Thursday and a little bit of a fall through, but it's been push-pull. I can't really read anything into it more than that. I didn't see the capitulation that would drive me to go buy something, long term anyways. So the bear rally is still in play for now. Bearish and plenty to worry about, but the markets will do what they do. And what do I mean by that? That gap down triggered everybody to sell, and once the sellers are gone, the markets will slowly tick upwards until they find another seller, right? So the prices can raise, and that's kind of what they do. What they do. Economic data is light for the rest of the week. I just think it's going to be earnings driven. We'll keep an eye on what Netflix does the next little bit. So far, so good. It was up 15% pre-market, or I should say post-market, and I think it's only about 10 now. Well, maybe it's higher. I don't know. So we're seeing things come off a little bit. I just want to see how the investors eat or absorb these numbers. So keep an eye on the reaction to results. All right, let's go out to the markets and see what you have. We got a couple. Might be a little bit short of a class today. That's fine. There's really not much going on out there to trade. Okay, looks like we're playing my favorite game, push pull, gap down, go bullish, bearish. Right, a little bit bullish here now, a little bit more bearish. But look at the ones that are dropping a little bit lower, or didn't go as bullish. Nasdaq and the SPY. So kind of is where it is. Kind of a mixed bag. Look what's outperforming over here. Energy. All right, so we'll see where they take us. Okay, who's first? Let's go back over here. Okay, Newmont, one on our list. I didn't show the chart. This worked out perfect because we've got a trade on it. James has got a butterfly. Let me zoom in. Okay, shrink this out. Okay, what do we got here? We got a October 28th, so week 4. It's got a week and a half. 40, 37, 34. 40, 37, and 34. Targeted butterfly to the downside. Excellent. And I imagine you could maybe do that little snapshot here of Fibbo, or maybe you're taking this measurement and adding it to your entry point. However you got there is fine. I like it. Targeted butterfly for the next week and a half as Newmont is going to break down 40 and come down and hit this 37 according to James. And if you guys are like me, you could stagger exit points. If this hits this in the next, it'd be ideal if it hits it Monday, Tuesday of next week. That'd be great. But once it gets down there, you could take a percentage of it off, maybe half or a third, whatever you want to do, and go from there. I love it. Okay, NEM will carry over onto our bear watch. Thanks, James. Who's next? Oh, Connor's got something here. I had a tough week last week. I placed a lot of butterfly trades this week to ride out the volatility. All right, let's take a look at it. And this is DG, I believe. 21st October, which is this expiration cycle. And Connor was saying, hey, he's put on some butterflies to kind of absorb some of this volatility. He's got a 230, 240, 250. 230, 240, 250. Thinking that DG is going to just sit right where it's at. I'm going to zoom in on this a little bit more. And that might change my drawings. But I can redraw them. Whoops. There we go. All right. Okay. I like it. Maybe I can just move it right back. There we go. That almost worked. Let's do a fair shake. Because when it's zoomed in, you'll see it's a little bit more room on this. Let me read them once again. 230, 40, 50. 30, 40, and 50. Well, I drew them backwards. Yeah, okay, nice. Not bad. All it's got to do is kind of meander around right where it's at. Bring home a couple of bucks with the DG. I'll put DG down. In the short term, sideways. And it's really short term, folks. That's 2.5 days. Awesome. Thanks, Connor. Looking at a butterfly. Also NOC. Is that in the ticker symbol P? Is there a ticker symbol P? I don't think there was. I think you're saying also NOC. Dan, I missed the first one. Looking at LIN. Is it LIN? Yes, probably going to be LIN. Yeah, there's the numbers. They make sense. All right. 260, 270, 280. All right. Let's take a look at it. I got to zoom in. Let's zoom in first, and then we'll take a look at it. Okay. Nice. A little bit of a bear rally. He thinks up against resistance or that 50-day moving average. Okay. And we've got 260, 270, 280. Okay. I can do that. 260, 270, 280. Okay. Definitely targeted. Targeted back down to this pivot point that it set on Thursday, which coincides with July. Okay. I like it. I like it. I'd wait a little bit more for confirmation. I'd like to see this cross the 280 plane first. But you are doing... okay, he's doing November expiration. So good. Put it on the watch list because this could be bearish, but be patient with it as you don't need to get into it until this thing confirms. What would be cool is if it breaks that, take a look at that. It's this weird... It'd be almost a head and shoulders or a breakdown of it. Nice. That's nice. I like it. Dan also has NOC. Let's take a look at that. And this is going to be a butterfly as well. 50, 49, or excuse me, 500, 490, 480 for November. Ooh, okay. Now this feels... It's a put butterfly. Let me draw the lines. It feels almost a little counter active. 490, 480. Okay, yeah, you're playing. Yeah, so you're playing a pullback here. It looks like this is almost a counter trend trade here, Dan, in my personal opinion. But it could pull back. This one's going to be a little tougher because I mean this gap down this morning and has moved higher. So you might be asking for a little bit more of a consolidation or a pullback. I would be okay with the butterfly if it does indeed pull back. Understand, we're up here. We're actually we just broke out. And it's kind of tough because, yeah, I would be a little bit reluctant on this. More so, I'd rather do the LIN trade. That would be a better one. Keep an eye on this, though. I mean, if it does start to roll back over, that's probably a butterfly that you'd want to put on to stay sideways and be shorter term with it. Instead of throwing it out there for November because it's a little too counter. Yeah, just be patient. Wait for it to confirm. Then you can go. Waiting for more movement. Yes. Okay, cool. Thanks, Dan. Yeah, he's waiting as well. So put that on your watch list. Thanks. Let's see. Let me move down. Lost my place. Scott's going to play earnings on Apple. Okay, he wants... Okay, this is just a question. What's your call on their pattern? All right, well, Apple's going to be... That's a coin flip. Yeah, there's nothing on it. Let me draw. Let's see if I can get something interesting. Well, see, it's got that... And it's again, you've got this gap down and then it gapped up like the market. So you've got bullish engulfing, dark cloud cover, inside day, or a bullish harami, confirmed with a red candle, and now you've got a gap down that's actually moving back up. These candles are giving us nothing. So what I can do is just say, okay, there's a surge of price going back up to 145. That's it. And we're back into a range. Good thing about earnings is they're all coin flips. So you just pick a side, run, take a look at Thinkorswim, and see what the plus minus is for its earnings date. Scott says it's the 27th, I believe. That's great. Just, do you want it to go up or down? You think it's going to go up or down? Well, based on not increasing the price of the 14, based on slowing or expected slowing in demand, I don't know how Apple gets out of this unless Apple TV did really well in its sales. I don't know. I would probably just guess to the downside and then just set it up. So the pattern, there's nothing in it. There's nothing in it. I'm just going to say that, hey, well, price from Thursday versus price today, this thing's just kind of moved back up to. It's a bear rally. Earnings, that's a coin flip. We saw Netflix beat, right? So if you think it's going to beat, run the calculation, target it wherever that is. I just guessed on 155, folks. You got to go run the numbers. Or if you think it's going to miss, maybe it revisits its June low very quickly. I wish I could be more helpful. That's Scott, but earnings is that coin flip. Now it's cool. We do have a couple of other ones coming up before the 27th. So see how things get absorbed and digested before that. Anything sympathy wise, I don't know if they've got any other technology companies earnings before that. All right, wish I could be more helpful. CRM for Sebastian. Let's do it. CRM, the 28th of October, week 4, 152.5, 148 bear put. I jumped too quickly to my pin. I've got to zoom in first. All right. Okay, I think I can draw from here. 152.5. It's going to make me draw this, isn't he? Right about there. And then 148 to the downside. About right there. Okay, not looking for much. Bear rally triggered and play the gap, but will likely go lower. Sure. Okay. Okay. So playing a retracement, a gap retracement from this move, and it's almost confirming it's going the wrong way. Actually, it's confirming the previous day's close. But if you want to play it on the low, it's just going the wrong way. But I could completely get behind that. A closure of a gap, that's totally fine. Let me put it down as bearish. Not shooting for much, right? Just wants to close the gap. Let me draw the lines. 152, which is basically the low of the candle here. Or the open. Maybe it was the open of the day. Let's see. Where did it open? Very close. Very close. And then right there. Okay, just playing the close gap. And October 28th, plenty of time. Week and a half. Okay, fun. What did I write that? Okay, I wrote it down. And let's continue because there's more. Okay. Oh, he's got a bull for us. Let's take a look at it. General Mills. Yeah, this is one that Rob talked about. I was actually going through them. Did I put it on the watch list? I thought I had it on the watch list. If not, I didn't. I know I didn't show the chart, and it was just because of today's action. I guess I can manually zoom this, but okay. Would be a candidate for a diagonal call spread up to 80, and I agree. It just needs to confirm first because, and this is why I left it off. I like this, and yesterday it looked pretty decent. Today it looks like it might want to try to roll over, but if it can green up for us, what I mean by green up, little green candle, then yeah, 80, 81, nice slow diagonal crawl. Let's keep it on the list. Let's carry it forward. GIS. I'll make sure I write that down, not GLS. Sometimes I write down ticker symbols wrong. Okay. No, I'm with you. And it really just needs to stay kind of above this, 78. Let's call it 78. If it could stay above there, then yeah, it'll be a good candidate. Thanks, Sebastian. Okay. Oh, general question. Cool. Why do some ticker symbols have monthlies and others weeklies? Who determines that? The CBOE. More and more are going to weeklies. It really just depends on the activity that the company wants. When you have weeklies, it's super diluted. It's super active. Generally, it's for companies that are very active. They'll offer it, and it's up to the company. It really is. The CBOE, all they have to do is just go up to them and say, look, we want to be more diluted. We want to fill out some paperwork and see if we can't do weeklies. Now, that's my working knowledge of it. Past that, I'm not sure what loopholes they have to be, if they have to be a large cap or have to have a certain amount of volume a day. I'm sure there's probably little pieces there. But restrictiveness, I don't think it's good. It's too big of a deal. And what I mean by that, the CBOA would be more than happy to allow, I would assume, weeklies due to the fact that the activity they can trade it. It generates commissions and transactions and all sorts of stuff. So I think they have no problem with it. But I believe it's on the company's side if they decide whether if or not if they want weeklies. Might want to do a little bit more research on that. I could as well. But I truly believe that I think it's the company that makes that decision. The CBOA will just say, okay, we'll take it. And maybe there is something to it. Larger cap companies, they got to have a certain amount of volume, things of that nature. Yeah, it really is up to them. And it's kind of cool because you bring this up. And just to continue on my tangent, let's go back and finish up. It's really cool that I like to put the egg before, or the chicken before the egg. And what I mean by that is, if you really understand that options do derive their values from the underlying, I will find out what I want to trade first before I even look to see if there's weeklies or monthlies, things of that nature. Why it's cool is because I got a lot of traders that'll run out and take a look at, I need to find a weekly butterfly. Then they find it, they build it, then they put it on the chart. Then they'll take a look at the chart and see if it's worth a darn. And I like the chicken before the egg. It's much better to actually look. I think this is going to go up a little higher. I think it's going to, we were just talking about General Mills. The diagonal spread. Let me just pull it back up to finish it up. The idea behind it was, hey, I think it could diagonal itself maybe up towards that 80 level. Okay, well, once you get to the options chain, there might be only one way you can play that, which is November's expiration or the next 3 days in October's expiration. However, once you realize you've got the weeklies, it doesn't change your mind on the diagonal spread, right? That's what you wanted to do in the first place, but it does give you lots of expiration choices. If you've got weeklies, you can do October 28th or the first week of November. You don't have to go the third week of November or the next 3 days, which is expiration of October. All right, so thank you for the teaching moment. I appreciated that. But yeah, I'm not sure exactly how you go about getting weeklies, but I do believe it's up to the company. There we go. So take a look at this. As I was blabbling, I noticed the markets are rolling over quite a bit. Now it is midday, and they usually have. Obviously, you can usually see 3 moves with the day. You've got the morning, the afternoon, which is usually a retracement, or boy, it can break down, and then you get the end of the day. So there's really 3 big moves. I call it morning, lunch, and close. Open, lunch, and close. And right now it looks like we're sliding a little bit. But based on the pattern that we've seen, and if indeed we're correct about that, this is just an overall bear rally, today would be the rollover move, or at least to threaten the gap that we saw yesterday. All right, cool. That's enough of that. Okay, so here are our trades. Not a lot. Please check earnings on all of them, but I do like them. More to the bear side. That DG in the sideways trade looked pretty good. Or was it sideways? Yeah, it was sideways. And then General Mills as a bull. We do have a lot larger list if you guys want to check the updates from Monday and Tuesday. Well, yeah, Monday and Tuesday. All right, guys, thanks a bunch. Appreciate it. Thanks for your participation, and we'll see you next time. Bye, folks.